All right, so this is something I cover every webinar, and it's kind of important. This is what makes the market move, and knowing what make the market move is going to give you a big help in trading. And a market consists of a lot of retail traders. These little marbles are myself and probably everybody else here. And there's millions and millions of retail traders around the world. And it's important to understand that when retail traders are the majority of the volume in the market is not going to be, you're not going to get a trend. We cannot create trends, reverse trends. We can't do any kind that's going to be significant as far as market direction is concerned as retail traders. If we're just in there and there's not enough institutional money at that time to move the market, we're just going to end up with a lot of chop and a lot of chaos. And you don't want to be trading when you're just trading against other retail traders, because there's no edge for you. Now, what's really driving the market is this big marble here, and these are the institutions. Now, institutions are, as you probably know, are made up of companies like Goldman Sachs, JP Morgan, Morgan Stanley, all the big investment banks, very big money, billions and billions of dollars that they can invest and trade. But also, the institutions are also made up of hedge funds, and there's hundreds and hundreds of hedge funds, more billions and billions of dollars. And then you have pension funds, police pension funds, fireman pension funds, state pension funds, more billions of dollars that can be traded in the market. And lastly, you also have mutual funds, and that would be T. Rowe Price, Vanguard, big mutual funds. So those are the big boys that make up the institutions. And these are when these folks are coming into a market, when they're pushing a stock up or down or index up or down, we want to know about that, and that's what the SPY super system does. Now, it's also important to remember that most of these, especially investment banks, most of their trading is not manually. It's all done through algos, or computer programs that's buy and sell. And so the computer programs are called algos, and they look for lots and lots of different setups, different structures, news. They trade off of news. If you've ever seen what the market does when the FOMC comes out with their interest rate decision on the Tuesday at 2 o'clock, you'll see the market make a big move up or down, and you'll see that move in a microsecond. It's way faster than you can touch a mouse. The volume is ripping into that thing. That's the algos reading the news. These same algos look for specific setups in the market. Like they know retail traders like to use MACD crossovers. So they'll look for MACD crossovers. They'll actually create them and then bust them. And so they can take advantage of retail traders with algo programs that they've got written. And there's hundreds of different algos that they use. But what we want to know is when the institutions are moving the market in enough force, we want to be able to know that so that we can join those trades. And I'll show you how we do it. Okay. All right. This is kind of a little bit off. This is going to seem a little bit off topic. Okay. This is obviously a blackjack game. This is ace of spades, jack of spades. These are $100 chips, but this is a blackjack game. And the reason I'm showing this slide, it's kind of it's sort of off topic, but not. Okay. When I was a lot younger, much younger, I made my living playing blackjack in casinos as a card counter in Las Vegas. I lived in Las Vegas, and I counted cards. Tracking cards is a kind of a skill you can learn. It takes quite a bit of concentration. But that particular being able to keep track of cards, it gave me a mathematical edge over the casinos by knowing when the cards were in my favor and when they weren't. So when the cards were in my favor, I'd make larger bets, and when they were in the house's favor, I'd make the minimum bet. And there's a strategy in blackjack called the basic strategy, which is what you do based on what cards you've got and what the dealer has up. But in any case, what happens is by knowing what the composition of the remaining deck was, then I was able to have an edge over the casinos. So trading stocks and options is very similar to that. Okay, without knowing what the institutions are doing, the trader has no edge. So in essence, you're gambling. If you don't know what the institutions are doing, you're gambling. The SPY super system is basically, I call it our card counting system. This gives us an edge over other traders, allowing us the ability to become consistently profitable, because we know what the likelihood or what the probability is that the stock's going to continue up or continue down. So that's why I use that analogy, because it's actually, I did this for quite a long time when I was a lot younger. Okay. All right, so rules to trade by. These are the rules that I follow in the room and in the alert service. Just two basic ones, really. Trade the best and skip the rest. Okay, this is important. We're just going to only trade the very best setups we can find. And the reason for this particular rule, trade the best, skip the rest, is to try to get retail traders to not overtrade. Overtrading is one of the most common mistakes that retail traders make, and it costs them a lot of money because they get bored and they want to have a trade on, and they start taking way too many trades. We don't take a lot of trades in the room, as you'll see as we go along here. We only take the very best trades, but that's all you need. You only need the very best trades to make money. And then we skip the rest, and this is the most important thing. Skipping trades that are not high probability, this is going to save you more money. This is probably more important than trading the best. This is where you're going to cut the number of losses way down, and that is going to be a big help to you. All right, and our objective is not to make trades. Our objective is to make money. This is, again, meant to push people to not make too many trades. We don't want to be just making trades to make trades. Our objective is to make money, so we only trade the best. And that's really fairly simple, okay? All right. Now, in that vein of rules to trade by, maintain discipline. Now, maintain discipline, this is really important. And I say learn and follow the process. Maintain discipline means only take trades that meet the criteria that have been defined. In other words, the high probability trade setups and the strategies that go along with that. We have strategies that for different market setups, but you maintain discipline. So that is to keep you from just taking taking trades that don't meet your criteria. The second thing is to remain patient. This is the hardest thing for retail traders to do. Okay, very difficult for retail traders not to sit sit there and not put trades on. I mean, if they have a nice winning trade at 10 o'clock in the morning, and at 2 o'clock they haven't made another trade, they get antsy, they get bored, and they start putting trades that they basically justify, but they can't win with them overall. So that's important as well. And you'll see this repeated through this a lot. Remaining patient. All right. And as a profitable trader, we need an edge. Okay, profitable traders need an edge, and our edge are these. We have the SPY Super System software. This is the key. I've got this highlighted for a reason. This tells us what the institutions are doing. This is the number one thing. If the institutions are not in a trade, I'm not going to make the trade. Okay, I'm not going to make the trade. They've got to be moving in the direction that we want to take the trade. The next thing, and this is an edge that a lot of retail traders overlook completely. Trading relative strength and relative weakness. Now this doesn't mean RSI. This means how is the stock moving, for example, on a 5-minute chart, if you're looking for intraday trades. How is it moving relative to the S&P 500, the SPY, or the Qs? How is it moving? If the Qs are moving sideways and down, and your stock is stacking green candles moving up, it's got relative strength. Okay, and vice versa on the weakness side. This increases your edge, right? Because if the market turns against you, you're not going to drop as fast or go up as fast if the market's going against you and you're short. The stock is going to maintain much more of its profitability or its premium when the market turns. And then we trade with the market trend if there is one. And the last one, this is important, buy near support, sell near resistance. Okay, buy near support, sell near resistance. This is meant to keep people from chasing or basically suffering FOMO. If you see a stock in the morning, it's stacking green candles one on top of another, and you you jump in at the high, you're likely going to get trapped. You end up buying near the high, and it's going to reverse. The way to do this is to wait for the stock to come back down to support, or if you're going to be short, wait for it to come up to the resistance level and then revert back into that trend, and then join it as close to those support and resistance levels as possible. And this is where Heiken-Ashi candles are really important, because they can identify not just the reversal, but the confirmation that the reversal is real. Okay. All right. The compass system, which is actually called the SPY super system now, the compass system is part of it, but this is what helps us identify when institutions are in the trade. Right? This is really important. It identifies the highest probability trade setups while sidestepping the setups that look good but will fail more often than they succeed. This is what I said, trade the best, skip the rest. This is what helps us do that. It does this by identifying when institutions are driving the move and when they're not. And this software analyzes the complex trading data and displays the results in easily identifiable visual format. There's a lot of calculations going on to come up with the information that's going to be displayed on the SPY super system platform that you'll see. And again, this visual element is basically green and blue for long, red and yellow for short. This visual element makes it possible for even new traders to find the high probability trade setups. Okay. And again, how do we get an edge over retail traders now? And well, it's what we just covered is pretty obvious. We're only taking trades that are being driven by institutions. Only taking trades that are being driven by institutions. We've got to be able to know that. Trading with stocks that have relative strength or relative weaknesses, I just said, and trading in the direction of the overall market. And so how does this give us an edge? Well, one, our trades will be supported by institutional buying and selling. The stocks will be outperforming the index, SPY or the Qs, and they'll be moving in the direction of the overall market. This is real. If you're doing this, if you're doing these three things right here, you've got an edge over about 97% of other retail traders. Okay. All right. Now, before I get into it in a little more detail, let's just focus on the SPY super system software for a minute here, because this is really important. Sometimes it gets overlooked because of a lot of the other things we'll go into, strategies, etc. But the SPY super system is basically it's the critical element in finding and trading the highest probability trades. The SPY super system software, it's the engine that drives our exceptional results. When you see the results we have, we're talking about 85 to 90% win rates. The underlying reason for that is because we can identify when institutions are in the trade, and the SPY super system software does that. Okay. The ability to identify when institutional players are driving a bullish or bearish move and when they are absent, it's the key factor in pinpointing the high probability trade setups. Again, this is what makes us profitable. And this is the function of the SPY super system software, and it's a critical component. So as we move through here, just remember, this is the main piece of information that you need to find high probability trade setups. And I have this displayed in the room every day, but you can also buy the software and put it on your Thinkorswim platform and then trade it anywhere you want. You don't have to trade it on Thinkorswim, but you'll see as we go through this, just keep in mind, this is what drives the fact that we know what institutions are doing. Okay. And I'm gonna, before I get into it, I'm just gonna show you what it looks like on Thinkorswim. This is a graphic of the SPY super system on Thinkorswim with the things that we use, basically the indicators and some of these indicators up here. So we're talking about momentum right here, current time frame momentum. This is the most important one for intraday trades. This tells us what the institutions are doing in the current, in this case, current 5-minute time frame. This is multi-time frame momentum. This is looking at, in a 5-minute chart, this is looking at the 5-minute, the 15-minute, and the 45-minute, and determining if all three of those time frames are moving in the same direction, the same way. In other words, the momentum is the same there. And this is the long-term trend. So these are the key things. These are the key things that we use. This is the actual oscillator down here. It's a Laguerre, but it's important to understand that this Laguerre is modified. It doesn't have divergence as part of the formula, and it's strictly pure momentum. And this is the key thing here as far as what momentum is doing. And this is kind of a graphic of the triple Qs, but We've got a couple of other things on here that are important on the 5-minute chart. This is for intraday trading. This is the VWAP, the volume weighted average price. This is critical, all right? And this is where our support resistance. Remember I said buy near support, sell near resistance. This is the key level right here. The other one is this 15 EMA, because a lot of times the price, like it has in this case, gets quite a ways away from the VWAP. The 15 EMA then becomes your support or resistance level. So this is where we'll be buying on an intraday chart off the 15 or off the VWAP. And this white line that appears here is created by the SPY super system as a pivot point. These are very strong support and resistance as well. And I use them when a price is moving down toward the VWAP. If I'm short, moving down toward the pivot point. If I'm short, if I'm long, I'm going to wait for this pivot point to get near. So if it's coming up from below, all right, and I'm long, and it gets close to that, that's going to be an area where I'm going to watch to get out of the trade. And again, if I'm short as it comes down and it gets close to the pivot point, it becomes a good support level and probably a place where I want to start to take profits. But this is the entire SPY super system on a 5-minute chart right here. So now we can see what it looks like. I'm going to show you a couple of setups that we've used recently before we get into more detail here. Okay. James, you said you've owned the compass, but you're missing the RLT scan. Nothing comes up on the chart, and I'm missing the momentum oscillator. What you want to do is you want to get in touch with Rory or Sergio at Rightline and get the latest update to it. Because if you own the compass system, then you get the updates, and you need to get an update to get current. Missing VWAP and pivot point also. Yeah, that just you want to talk to them, and they'll put the latest layout on there. I'm surprised you don't have the VWAP because that's always been on there. Okay, and Rory says he's going to email you a calendar link for tech support. All right, this is a trade we took, just so you can see the SPY super system in action. This is a SPY we took this week. We were in SMR. We didn't take a lot of trades this week, maybe 3, 4. But this we entered on 513 and we exit on 515. And this is a daily chart I'm going to show you here. All right, but we were in here in on the 13th, out on the 15th for 56% profit. And $2,000 invested created about $1,170 profit on that one trade. All right, in basically 2 days. But I want to show you where we took it. This is a daily chart now. All right, so the VWAP we don't use the VWAP on the daily chart. What we're interested in here is the current time frame and multi-time frame momentum. Now you notice here on the current time frame momentum, which means daily. You see how it was yellow here, which was selling. Yellow and red are selling, blue and green are buying. All right. We went from the institutions selling a little bit to the institutions right back to buying. So we went from yellow to green. This is where we took the trade. It was right after earnings. We took the trade right after this went to green. Now the current multi-time frame was already green. The trend was already green, so we knew the institutions were buying SMR here. We bought it here, we sold it here, and we were out for a $56 profit, 56% profit. We get in at I think $2.08 a contract, and we get out at $3.25 a contract. I believe those were the numbers. But this shows you what we look for, and again, that's important. Okay. All right. This is another one we had that I'm using. I'm just kind of showing you what we look for on the SPY super system before we get into any details here. Question: if we are trading SPY, then would it make any difference if we're comparing the market with the SPX? No. I mean SPX. You can. When I say that you're trading the SPY, you can trade the ES or the NQ, or you can trade the SPX. You know, there's a few different ones you can trade, but I'm just using SPY as a general market. All right, so this was a Tesla chart here. If you look at down here across the bottom, this is first thing on the morning. It bounced up and moved up nicely again above the VWAP, moving up, topped out and starts to head down. What you're doing is you're looking at your price action here, and you can see you've gone from green candles to red candles. So you take your profits. Notice the current time frame was green all this way through. Current time frame momentum, multi-time frame momentum on a 5-minute chart. It stayed bullish all day on the multi-time frame, but it was chopping back and forth on the current time frame. So that's when you want to be looking to take profits once that changes color, or just based on the price. I mean, I just use it based on the price. This is a SPY trade here. This is a SPY trade, what we call a SPY super system, trading on a 5-minute chart. Okay, let's take a look at the index, the indicators here. Current time frame momentum. All right, so here's the VWAP. So we're looking at this as a support or resistance level. So we're looking to get in when the stock breaks above the VWAP. If we've got blue or green down here in our current time frame momentum. See yellow, institutions selling. All of a sudden, institutions buying. Now they were already buying in the multi-time frame, but we were looking for the current time frame, especially on a 5-minute chart. It goes blue right here. The institutions are buying, right? That tells us that right here, we can enter that trade. We enter it, it gets above the VWAP. Now the VWAP becomes our stop. And as the price moves away from the VWAP, the 15 can become our stop. But typically what I do when I'm riding a nice trade like this is I just watch the price action. And when the price action starts, the momentum starts to wane here at the top, I get out of the trade. You could have stayed in, it was still green, but I'd take profits on a trade like that right there. All right, and you see how obvious it is that the institutions are in there. Okay, and you can see here they were selling, and then they went to buying right here, and that's what we were looking for. It was green for the day, that particular day at that point in time, so we were looking to go long on that. All right, this was Wendy's. This was a trade we took very recently, back in 9th, I think, of April, of May actually, really recently, yeah. And this is a daily chart on Wendy's. Now, if you look here, we took the trade right here, right on this candle, right? As you see how this went from blue, current time from momentum, buying to selling right there, all right? And this was earnings, I think, right there. And we took it there, we took it short, we rode this thing down, and we made a beautiful profit on Wendy's just in 2 days. All right, we actually get out right here, but because we had made the profits. But you can see current time frame momentum on the daily, multiple time frame momentum on the daily. Institutions are selling, right? You see back over here, they were buying some, but the multi-time frame stayed red the whole time. So you're looking for these when you're in a daily trade. We're looking for these to be aligned on dailies. Okay. Okay. All right, and this is, I just throw these graphics in here just to put some humor. This is a trader who basically is trading on emotions. He doesn't have the SPY super systems to software. He doesn't know if the institutions are in a trade. He's basically trading off of some other strategies. Who knows? There's thousands of them that don't work. But that's what he looks like, and I'm sure if you've traded and been in losing trades, you know how this feels. And the whole point here is we're going to try to eliminate as much emotion out of your trading as possible by giving you indicators that are going to tell you which way the market's going, which over time are going to build your confidence up. All right, but that's what they look like. This is what we look like when it works for us. I don't really get that excited about trades. I try not to trade with any emotion, but it's a lot better to feel like that than it is to feel like that. And the main reason is because you know where the institutions and you're just following them in the trade. It is recorded. You can catch it later. Sure, you can, RS. Absolutely. All right. Again, this is process precedes results. This is something I fight with all the time with folks. People are judging how their performance is based on their P&L. Okay, they're looking at the P&L, and they think that the P&L is going to tell them how they're trading, whether they're trading well or not. They think the results of a trade determines whether it was a good trade or not. And let me tell you something. You can have a winning trade that's a terrible trade, and you can have a losing trade that's a good trade. So that's why it's important to learn the high probability criteria. What the criteria and the strategies are, that has got to come before focusing on results. I recommend people don't even look at their P&L. They should just follow the charts and trade off of the technicals on the charts. Because if you're focusing on your P&L without having a solid process to follow, it's going to end in failure. And I've seen this thousands of times. I've seen traders who focus on their P&L, and they're getting in and out of trades based on the P&L, and they're getting out of winning trades that they should have stayed in. They're staying in losing trades they should have got out, and they're basically determining if they're progressing as a trader by watching their P&L as opposed to learning the correct strategies and following those strategies, because this is what's going to make you profitable. Watching your P&L is not going to make you profitable. It's worse, actually. Okay, I just threw this in here. This is kind of an interesting thing. It's called an OODA loop. For anybody who's never heard of an OODA loop, it's a methodology that a lot of corporations use. All the military uses this, and basically it's just a way to basically try to give you a checklist to follow. OODA means observe, orient, decide, and act. So when I'm using scans and watch lists and listening to news to come up with prospects, I'm observing. What's the market doing? What's the scans look like? Then I orient. And orient means I identify whether the prospect meets the high probability criteria on the daily and 5-minute chart. It identifies support and resistance levels, know my next earning date, and check the option chain for pertinent information. So now I've got all the information to determine whether that is a potential prospect or not. Then I decide. So then I have to make a decision on whether this trade qualifies as a good high probability trade setup, and is it the best one I can find right now. Once I've decided that, then I've got to act. And this is to make the trade, try to avoid analysis paralysis. That's just kind of a thought process to go through. OODA, observe, orient, decide, and act. All right, this is a trade funnel that it's basically just this is a visual, a virtual. I don't actually have this, but this is the thought process I go through. I always say the daily chart has to be aligned with my trade. If I'm going to go long for a swing trade, the daily chart needs to be bullish. If I'm going to go short, it needs to be bearish. Don't try to trade against the daily chart. Then you use your 5-minute chart for your entry. Okay? Trade with the trend of both stock and the market. This is the context of the market. Which way has it been going on the 5-minute? Which way has it been going on the daily? And then the SPY super system must align. This particular criteria right here has got to be met. If the SPY super system doesn't align with the direction you want to take this trade, you can't take the trade. Everything just stops right there. Once that aligns, then you look for relative strength and relative weakness, and then you look to enter near support, sell near resistance. The stocks that drop down out of the bottom here become your highest probability trade setups. Okay, so that's the trade setup funnel. This is it written out. You notice the highlighted, the SPY super system indicators must align in the direction of the trade. And the stock to be traded should have a daily and 5-minute chart aligned. All right, so these are the two key things. There's other things in here. It should be above the VWAP for a long on the 5-minute chart and below the VWAP for a short on a 5-minute chart. Just a few of the rules to learn. These are not that complicated. And have patience. All right, very, very important to have patience. Okay, now just to kind of quickly, I'm going to get into the Heiken-Ashi here in just a sec. But I want to go over the strategies we use in the options room and the alert service. This is, if you're a member of the room or you're a member of the alert service, these are the type of strategies you're going to get. You're going to have straight calls and puts, of course. This is pretty common. All right, straight calls and puts. We also do straddles and strangles. I have a video on what they are. If you don't know what a straddle or strangle is, it's a non-directional trade. You don't care which way the market, the stock moves. What you do care is you want to see it move a lot, one way or the other. Okay, had a couple of really good ones this week in the straddles and strangles. Then I use debit spreads using weekly options expiration. We have a debit spread on Palantir right now for this coming Friday. It's a call debit spread. We're looking for Palantir to go up. And we do time spreads over earnings. This is another non-directional trade that captures what's captured, it's called volatility crush. Before earnings come out, the market makers jack up the premiums on the puts and calls because they don't know which way the stock's going to move after earnings or how much it's going to move. So they build in a bunch of extra premium in there called volatility to protect themselves. Once the earnings come out and they know which way the stock's going and about how much, the premiums come down. And what the time spread over earning does is it captures that volatility crush, and that's where we make our money. As the premiums go from very high to lower, we are able to crush that by actually selling the premium initially and then buying it back cheaper. And we have a weekly ATM strategy to capture premium week after week. Haven't done very many of these lately because this is for a neutral to bullish market, which we really haven't had. This has been a very, very volatile market. But basically, we sell premium every week on a stock about at the money to collect premium, and then we have a much longer dated put out in time to protect ourselves. I have another whole video on that. All right, I don't want to get into too much weeds on a lot of these strategies because they're all defined. And we do credit spreads to capture premium over a few weeks. We also have one other strategy here that I'll just touch on. It's called the SPY Super System, and these are for very high probability trades. We trade the SPY, the Qs, or you can trade the futures or the SPX. And this is done on a 5-minute chart. These are very quick trades. I can't alert on these, and I can't even post them in the room, but I do identify them when they're setting up. And a lot of folks do this on their own because they have the SPY Super System software, and they just trade off of that. But this is a very high probability, but it's a very very quick trades. Most of these trades are only in for 5, 10, 15 minutes, something like that. And I'll go over some of the results we've had with that. Okay, and the alert service is designed for day trades and short-term swing trades. Okay, it's not an investment service. It's designed for traders who can't watch the market all day, and you're gonna get real-time alerts on the highest probability trade setups. And we identify the highest probability trade setups by, guess what? Identifying institutional involvement. We check market internals, and then we do technical analysis beyond that to find the very best ones. That's what the alert service will be. All right, and so this equity curve for most recent, I think most Q4 and Q1 of 2025, very strong. Now this does include some SPY Super System trades that I've taken, and those are built into that. But most of these are trades that I took in the room and on the alert service. So pretty nice. And again, this is based on $2,000 per trade. Okay. All right, now we're going to talk about Heiken-Ashi right now. It's going to take a little bit of time, but I think you're going to find it very, very helpful. We're talking about Heiken-Ashi candles as versus regular candlesticks. Okay, and again, we're using the SPY Super System. Okay, so here we go. This is a graphic. This is a British pound, Japanese yen. This doesn't matter. These are candlesticks. These are Heiken-Ashi candlesticks. All right, and we're going to notice a few things about this. But the key point I want you to take away initially is flat-topped Heiken-Ashi candles. Candles with flat tops on them are bearish Heiken-Ashi candle. These are bearish. And when you have flat top after flat top like this, this is a bearish trend. These Heiken-Ashi candles tell you you're in a bearish trend right here. Notice no shadows, no wicks on the top. Flat bottom, flat top, flat top, flat top, flat top. Before I go through too much more, see these are the bullish candles. Notice no tail on these things. Flat bottom, flat bottom, flat bottom, flat bottom. These are bullish Heiken-Ashi candles. These are bearish Heiken-Ashi candles. And what we're trying to find when we're in a trade, if we wanted to go long this particular instrument, for example, we didn't really want to short it, we'd be waiting to find a reversal, right? So how do we find a reversal? You can see the big candles coming down that are red with flat tops. Then you start to get little wicks on them, and then you start getting big wicks and tails. Obviously, the momentum to the downside has fallen off here. Now, this is a Heiken-Ashi reversal candle to the bullish side. You see how we have bearish candles, dojis, basically no flat tops, no flat bottoms, and then we go to a flat bottom. That's a Heiken-Ashi reversal candle to the bullish side. Now, I want to point something out here. When you've got candles this big coming down, this is not a tradable, in my opinion, this is not a tradable Heiken-Ashi reversal to the upside. The candles are too small relative to these big candles. You need to see more force. So what I wait for is I wait for this. See, this came up and then it starts to chop around again. We have a bearish Heiken-Ashi reversal, and then we start getting wicks and tails. Here is the bullish Heiken-Ashi reversal that is the reversal back into the trend right here. And the reason is because you got a flat bottom and you got a big candle, and you had big candles coming down. Now you got big candles going up. Right? This is a Heiken-Ashi reversal to the upside right there. Flat bottom, you notice the wick and the tail, and then a flat bottom, and then you get multiple flat bottom candles in a row. This is how you identify the trend. This is a bullish trend, and you're staying in this trade until you get a reason not to. And this would be the reason not to for me. You still got flat bottoms most of the way, but once you get a red one with big wicks and tails like that, I'm out of the trade. But this is a Heiken-Ashi reversal, and this is a trend using Heiken-Ashi candlesticks. So that number one thing to remember is flat topped candlesticks are bearish Heiken-Ashi candles, flat bottomed candlesticks are bullish Heiken-Ashi candles. Okay, that's a key thing. Now you do notice one other thing. Each starting candle after the previous candle always starts in the middle of the previous candle. Always starts in the middle of the previous candle. You see that? Because they're created by two candles. All right, see, it starts right in the middle. Okay, so now if you haven't used Heiken-Ashi candles in your technical analysis, you may want to start using them. And it's really pretty easy. On any platform that you've got for charting, you can just switch from candlesticks to Heiken-Ashi. They all have that option to do that. I'll show you how you can do it on the Thinkorswim platform. All right, and I do it on TC2000, but it's very easy. They mean average bar in Japanese because it's taking two candlesticks to create one. It smooths out the price action, so identifying trends and reversals is clearer, all right? Because they eliminate a lot of the noise, and it makes it easier to see trends and to stay in the trades. So you're not going to get shaken out as easily. A lot of retail traders have a real problem when they're in a trade and they get a funky 5-minute candle that's going against them, and they freak out because they're in a bullish trade. All of a sudden they get this 5-minute candle that goes against them, and they get shaken. They just jump out of the trade. The Heiken-Ashi candle is going to eliminate a lot of that. And again, here's the point in Heiken-Ashi candles have flat bottoms, bullish ones have flat bottoms, and bearish ones have flat tops. That's the number one thing you want to remember. So how to identify a reversal? You go from a flat topped candle to a flat bottom candle. That's a reversal of the trend. Okay. And I mentioned this, and I'll just reiterate this. Reversals in a bullish trend will have a flat bottom Heiken-Ashi candle, followed by usually a doji candle, having both wicks and tails, followed by a flat topped bearish Heiken-Ashi candle. That's a bullish to a bearish trend reversal. All right. And I'm not going to go over all of this I've got here. When you get the recap, replay of the video, you can stop it and read it through if you want. This is a post I did on Reddit a few years ago on Heiken-Ashi candles. All right. And again, I go over the fact that on the Heiken-Ashi candles reversal, the height makes a big difference. How strong is that reversal candle? It needs to be as strong as the candle was that created the original trend. When you're looking for a trend reversal, you want the reversal candle to be as powerful as the original candle that was driving down to the support level. Okay. All right. So this is just kind of a recap of Heiken-Ashi. I'm going to show you some actually on a chart. Again, they evolved from Japanese candlesticks, obviously. They combine the open close data from the previous period with the open high low close data from the current period. That's how the calculation is done. And that's why they end up starting at the halfway point of the previous candle. Again, the fusion minimizes market noise. That's really important. It takes away the noise. The trend is going to be much easier to see. And again, it excels in identifying trends, potential reversals, and classical technical analysis patterns, as we'll see here. Right, so this is just again, let's understand these candles a little bit. Again, here's another setup like we were looking at before. Right, so trades coming down with flat top candles, bearish, 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 right? Bearish Heiken-Ashi candles. Here's a potential Heiken-Ashi reversal to the upside, but it's not big enough to offset these. Now, if you were, let's say this blue line here was like the VWAP or your support and resistance level. When you get a Heiken-Ashi candle like this, a Heiken-Ashi reversal candle, flat top, flat bottom, that goes through your resistance level, that's a breakout. And the Heiken-Ashi candle is giving you confirmation that breakout is real because it's taken two candles to do that. That's why they're so much better than regular candlesticks in identifying identifying reversals back into the trend. The actual reversal is confirmed by the Heiken-Ashi candle because Heiken-Ashi candles, because they're made up of two, they're inherently a confirmation of the reversal in the trend. All right, so you can see the beautiful trend here, breaking above this resistance level here. It breaks through it. That would become, of course, your support level. As long as it stays above that, you stay in it. Now, when it gets stretched way out like this, you're looking to take profits as soon as you start to see any kind of reversal. And I probably would take it off right here because I've made so much profit on it. But this is where the actual reversal to the bearish side takes place. All right, so there is your trend. You see how much easier it is to see. All right. And again, tips for using the Heiken-Ashi candle. Examine nearby support and resistance levels. And this you should be doing for all your trades. If you're in a trade long, you don't want to be taking it long if your 200-day moving average or your 100-day moving average is very close to where the stock price is right now. In other words, it's just above the stock price. You need to have room when you take a trade to the upside for a long, to the downside for the short, to justify taking the trade, which means you don't want any support or resistance levels in the way. And the rest of the stuff is fairly obvious here. You want to take a stock with relative strength or relative weakness. I do watch Bollinger Band's expansion to tell me if I'm breaking out of a compression, but we don't need to get into that. All right, and I do switch to regular candles when I'm going to exit the trade. Once I'm in a profit and I want to exit the trade, I'll switch to regular standard candles so I can catch the reversal more quickly, because I'm not worried about being a confirmed reversal. I just want to get out as close to the top as I can. So that's what I do. All right, so here's a quick recap of these Heiken-Ashi candles. It smooths out the price action, reducing noise, makes identifying trends much easier, improves identifying confirmation of trends and trend reversals, and it helps identify potential exit when the candle's body shrink or reversal occurs. That's why Heiken-Ashi candles are so important. All right, and I've got a couple of graphics of charts, and I'm going to show you some real ones. This was Uber. This is a standard candlestick chart on Uber. You can see the gaps, gap. All right, this is a Heiken-Ashi candlestick on Uber. Here's your Heiken-Ashi reversal candle right here. This is where you would be buying it, right there on May 1st. Let's go back to May 1st, right there. Okay, right there as it broke above the 50-day. That's a 50-day moving average. As it broke above there is where you take it, because here's your reversal right there. Notice the downtrend, choppiness, reversal right here, flat top, flat bottom, and then you would just stay in it right up to here, and this is likely where you get out. But you can see where this went. If this went from May 1st, right here, all right, to the exit over here 5 days later, this is where you would have get in, this is where you would have get out. Pretty big move. Okay. Now I'm going to look at some live ones from Friday's trading. So bear with me just a minute here. And I've got a few charts I'm going to show you. First, I'm going to swing over to a TC2000 chart because it's easy to see on here right now. This, by the way, was an SMR. This was SMR. This is when we took that trade, if you remember. This is where we actually bought it right there. On SMR, we get out right here. And that was a pretty nice trade. But let's quickly look at Heiken-Ashi candles on SMR. See it right there? Flat bottom, flat bottom, flat bottom. All right, now I've got a few others I'm going to show you, just to show you what these are from Friday. This is BHF, okay, Bright House Financial, and you can see that you can see the downtrend here. This was a nice Heiken-Ashi reversal to the downside, but here we have a Heiken-Ashi reversal to the upside right here, all right, and it's riding. This white line is the 8 exponential moving average, is something I use, but the important thing here is that here your flat bottom candle after having some choppiness right here. So that's a Heiken-Ashi reversal to the upside on BHF. Okay. Show you another one here, LDOS. This is basically a Heiken-Ashi. It's not really reversal. This is a Heiken-Ashi continuation. See, here's your Heiken-Ashi trend right here. You see how it's been in an uptrend and then flattens, then a continuation of uptrend and then flattens. Now we're getting Heiken-Ashi candle to the upside on LDOS. This is a nice little setup for Monday morning right here. And if you look at the regular candles on here, this is what you see. Okay, these are regular candles on LDOS. You can see it's breaking out. All right, and Kimberly-Clark, another nice bullish one. Right, zoom in, you see a little tail here, flat bottom. That's a Heiken-Ashi reversal to the upside on Kimberly-Clark, and decent setup on Kimberly-Clark. I look over here and I can see it's breaking above a couple of moving averages. The 50 is the red, the 200 is the purple, but that's just what I use on TC2000, right? But I just want you to see the setup on these so you can understand what Heiken-Ashi candles are and how to use them. It's ECL, there's another one. Nice little reversal here. Another nice setup for Monday morning. STZ. Constellation Energy, big, huge Heiken-Ashi reversal right there. Okay, STZ, and one last one, Costco. Nice move right here, and then chop, 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 right? And then bam, Heiken-Ashi reversal candle on Friday. Friday was a strong day. The market's been very strong this past week. 5 days in a row it was up. So you can see that Costco didn't do much during the week, but it did a nice one right here. And here's the Costco chart right here. All right, and you can see it. For me, if I was going to get into this, I'd wait for it to break above the high from Monday and then enter it as a long. All right, and it wasn't an awful lot of shorts on Friday because the market was so strong. But here's TVTX. All right, so there's a regular candlesticks on the TVTX. Let's switch over to Heiken-Ashi candlesticks, being right there. Okay, again, now I'm looking at as a SPY super system, which I'll show you in a minute, that to determine if the institutions are selling these. That becomes my main criteria. But this is telling me that I have a Heiken-Ashi reversal right there in TVTX. There it is, and there's my Heiken-Ashi reversal, a good short on TVTX. TMT, another short Heiken-Ashi reversal. VBX, another good one. Big candle, big volume. And MRX. Those are the shorts. There wasn't an awful lot of shorts. See, this was in a nice uptrend, but that's definitely a Heiken-Ashi reversal. So if you were in an uptrend, obviously you'd be getting out of it here. All right. All right. So let me just slide that over here, and let me just go to my SPY super system for a second. All right, this is live SPY super system. This is SMR. This is live right now from Friday. This is the trade we took right there. Remember I showed you it went from selling to buying, and we took the trade right there. Right, but if I look, this is the daily chart. See how it's all green? This tells me I would want to go long on here. Now let's take a look at TVTX, for example. The ones I showed you just a minute ago for a Heiken-Ashi reversal for the short. All right, here's TVTX. What is this telling us, TVTX? It's giving us green here, right? So I can't actually take this short until this turns to yellow. And it likely will turn to yellow pretty quickly, but I've got yellow here in my current time frame momentum on the daily, but I have green on my multi-time frame momentum, right? So I wouldn't be taking that short yet. But now if I look at it on the 5-minute chart from Friday, if I was gonna intraday trade this thing, you can see how this stays, the multi-time frame momentum stays red. But notice this choppiness down here, all right? So this would have been a good short intraday trade right here, as it came off the VWAP to the downside. Okay, and I just follow it down, and I get out when it flattens out like this. But I wouldn't be taking it on the daily chart because of that, the fact that it doesn't have the institutions selling across the multi-time frame and current time frame, right? And let me just look at one more. I got a question here. Costco, right? Here's Costco. And with Costco, see, now this looks good, right, for the long, right? But you see this little yellow? If this opens up Monday and this turns blue, then I'm going to take it. But I'm not going to take it until it turns blue. I've got to see that the institutions are buying this thing. Now the momentum is pretty high. It's way up high. It's fairly high on the oscillator, but it's showing a little bit of a dip, even with the gap up. So I would be leery of something like that. So that's what I look for. Somebody asked the Tesla. Joe, you want to take a look at Tesla? Okay, I'll show it to you on a couple of charts. It's Tesla right here. Long, obviously. Green, green, green. Multi-time frame, current time frame momentum on the daily chart. That's a buy for a long. You have to look at your indicators, of course, but let's see what it looked like on the 5-minute chart on Friday. Choppy as heck. You see the choppiness here? Very choppy. Looked good early. Right here, looked really good, and then it fell pretty hard and chopped around a lot. But for the daily chart, it looks really, really good, right, on Tesla. And if I look at Tesla, just quickly over here, this is a TC2000 on Tesla. Here it is. You can see that I have some horizontal, these are horizontal resistance levels that I have. See, went right up and stopped that. So I'd be waiting for it to break above there, but it's definitely a bullish setup. Definitely a bullish setup on Tesla. Anybody else have any specific stocks they'd like me to look at? I'd be happy to look at a couple here. I don't want to kill too much more time, but if anybody has one that's specifically interested in looking at, I'll be happy to show it to you. Joe, TQQQ. Yeah, that's TQQQ right there. Okay, that's a leveraged ETF on the triple Qs. Okay, you can see what you got here on the 5-minute chart, but if you want to look at it on the daily chart to take it long as a swing type trade, you're good for long in this right now. I'd be very hesitant right now until you see how the market opens on Monday, with the downgrade of Moody on the U.S. credit rating just before you would do anything like that. All right. So let me get back to the presentation here. Taking up quite a bit of time on those. All right. So we looked at Heiken-Ashi candles. Okay. Now these are the guys. Now we've covered the Heiken-Ashi. I'm going to show you the results. And now remember, the results we're getting here are because of this SPY Super System software. That's what drives these things. In 2023, using $2,000 per trade in the room, we produced a little over $60,000 profit on the trades we took. In 2024, and this just says how much of a percentage trade you use. It doesn't really, we used 4% of our account when we first started at the end of the year, each trade was only using 2% because our balance had grown. 2024, $2,000 in each trade produced about $55,000 in profits. And again, the profits that we make are, a lot of it's depending upon whether we've got a trending market, a choppy market. Obviously you have to get out of trades more quickly when the market is choppy. All right, and this is something I'm really pretty proud of, because this was really, if you remember just recently, with the huge amount of volatility we had in the market, when the tariffs went on and then the tariffs were paused, and there was all this talk about tariffs, and the market was chaos. Many retail traders I know actually gave up trading at that point. They got margin calls, they blew up their accounts, and they're out of trading now for good. But while the SPY was down 10%, it was actually down 10% in 2 days. These are the only 4 trades I had on. These are the only 4 trades we closed during that period. We had AVGO, Broadcom. We got in for $75 a contract, out for $1.04, and made 39% profit. 2,000 invested, produced 754. Here's Nike, and this was a really huge trade. In at 285, out at $9, 216% profit. This was because when the tariffs went on, Nike makes most of all their shoes and sneakers in Vietnam, and they were talking about like a 35% tariff in Vietnam, and the stock collapsed, and we made $4,300 on a $2,000 investment. Biggest trade I've had in 2 years. I mean, I don't get these kind of big trades because that's not what we shoot for. But the news helped us there. We also had Sarepta. We were $4.50 a contract, out for $8. That's a 78% profit, so $1,400. And NNE entered for $1.80, out for $2.25, 25% profit. Those are the only 4 trades we had on. Those are the only 4 we closed during that week. And while the market was down over 10%, you can see the results we had. And this was really by only taking the very highest probability trades, keeping your trade count low, looking for the best. This is where we're able to do that. All right, now I'm going to quickly run through my results of 2024 month by month, but I really don't want to spend a lot of time on this. This is not to talk about how good we do in the market. I mean, it's the profits are important, of course, obviously. But remember, it's the strategies and the SPY Super System that gets us these results. But I'm not trying to impress anybody with results. I'm trying to impress upon you 2 things here: that we have a high win rate, we don't take a lot of trades, and this was in January, and our potential profits on most of our trades are going to be in this range: 10%, 43%, 37%. These are the kind of trade results that we're going to get consistently. We get them consistently month after month after month. We had a 96% profit here, and we had that 216% profit in Nike, but those are outliers. This is, Dave, what you're going to see most months. All right, this is the kind of profits that you can expect, and you're going to have losses. We have losses, individual losses each month. We only had 1 losing month last year. All right, so this is February, and again, you can see 24 and 2, 92% win rate, 11,745. This was a really big month for us. That's much larger than normal, but still pretty nice. But again, see the percentages here. All right, see the losses, see the percentages, 50%, 26, 29, 28. This is the kind of percentages you see. Now, some of these are day trades, and most of these are swing type trades that we were taking. This was May, and I'm just jumping around in these just so you can kind of see. This is when we did a lot of time spreads because they were the criteria were very favorable for taking time spreads at that point in time. All right, 15 and 2, 88% win rate, $4,900. June, $7,500, 86% win rate. See these same percentages, right? July, 85% win rate. The alerts had 75. This is my lowest win rate in the alerts, and since the service has been in effect, but it still made $3,300. All right, that was July, August, right? 17 and 2. Again, see the percentages, all about the same. This was my only losing month last year, September. We only took 13 trades, 8 wins, 5 losses, 62% win rate, down 1,700 and down 295 in the alert service. Pretty puny when you compare what we're making most every month, because in October we jumped right back up to an 85% win rate and a $7,448 profit. So you can see there's our biggest loss of the year, our only loss of the year on a monthly, and there's the next month's win. All right, and there's November. So again, I don't want to beat these things to death. You can see the percentage gains we get, one after another, after another, after another. All right, and this is this year, January, February, March. I just kind of gave you a synopsis of it. 15 and 3 in January, 3,100. Again, choppy market, had to be very cautious. 16 and 2 in February, 3,800, 89% win rate. 20 and 4. So you can see the wins are smaller to get a 3,800 with a 16 wins. 20 wins, 4 losses in March, 7,800. Pretty nice win rate in March. And then in April, and this is full April now. 11 wins, 2 losses, 85% win rate, 5,400. Right now in May we're 5 and 0, and we're up about $2,800 I think so far in April. But those are the results. Right, so that shows you what the SPY Super System software can do for us by looking for high probability trade setups that the institutions are in. All right. The alert service, just to kind of get into a little bit of detail on how this works. You're going to get, this is what the alert's going to look like. You're going to have a stock symbol, a strike price, the expiration date, and the price to pay for the option. So here's the one on Nike that we sent out. The originals would say this is the date we took it, by April 11th, expiration date, 67 puts. That was the strike price for 285. Okay, and sometimes it might say like 285 to 290 or something like that. But so that would have been the first alert. The next alert was the same alert, but it says sell order for $9, because you get an alert for your entry, then you get an alert for the exit. And then when we close the trade out, we just recapped that they were sold for $9 on April 3rd. And you know, I didn't go into details that was a 216% profit, but if you're taking the trade, you'll know it. James, check with Rory on that. Can they send you the updates by email? You know how to install and you want to restart using the product. Okay, Rory will see that, and I'm sure he'll respond to that. If they can do that by email, then you can you can get it yourself, I think. Yeah. Okay, just let them know that. Okay, so there's what the alerts look like. Okay, again, how do we achieve these stunning results? Well, most of it you already know. We're able to we follow the process. The process is the criteria that we use to find the best high probability trades. It's the critical part of being a consistently profitable trader, is to have a methodology or a process that you follow. You have to do it religiously. You don't want to wander away from it. That's you know, if you're trading and then you start getting distracted by social media posts of this stock looks great or that stock looks great, or somebody tells you that this other stock looks good, believe me, you want to make sure that the trade meets your criteria, that you have confidence in it. I wouldn't be following somebody else's trade. Even when I give a trade out in the room, I recommend that people take a look at the criteria, look at the trades, look at the setup, look at the technicals, make sure you're comfortable with the trade. right? Because you have to be confident in that trade. So we're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. And our market internals in this case is cumulative volume index, that I follow, which is total number of volume of stocks moving up minus the total number of volume of stocks moving down. If the moving up stock volume is higher than the moving down, you've got bullish internals. If it's vice versa, you have bearish internals. If it's fairly close to the same, you have neutral. Right, so we only take trades when both of these are in our favor, allowing us to align trades with institutions in the market. I will take trades if the institutions are in and the market internals are neutral. I won't take a long trade if the market internals are bearish, but I will take it if the institutions are in and the market internals are neutral. And again, how do we do this? The SPY Super System software is identify when institutions are creating a trend. Triple screen assessment of momentum, I showed you that, and trend. Momentum is key here. And again, this is momentum based on true momentum. It doesn't have divergence built into it, right? And that's kind of a critical thing. Most oscillators use most divergence as part of it, and I don't think it does anything for them. I think this triple momentum is much more important. Okay, so I'm going to go through some charts here. If you have any questions, throw them out there. But again, here's what I showed you earlier. This is the SPY Super System software. This is what it looks like on Thinkorswim. You don't have to trade on Thinkorswim. You can install it on Thinkorswim. You don't have to pay for Thinkorswim. You can install it on Thinkorswim and trade off as another platform. I trade off of Tradier. A lot of people trade off of Tastyworks. A lot of people trade off of Scottrade. I mean, there's a lot you can trade off of, anything you want. Interactive brokers, but you install the SPY Super System on Thinkorswim so that you can see the indicators like this. All right, and again, current time frame momentum, multi-time frame momentum, long-term trend. These are your keys. For 5-minute trades, this is your key. When you're doing an intraday trade, you're only going to be in a trade for a short term time, like a SPY Super System, for example, or even a stock. If you want to be like in Tesla, but you're going to get out really quickly, you're just looking for a quick pop or a quick drop in it, then you only use the current time frame momentum, and you try to enter on the VWAP, close to the VWAP or close to the 15. All right. And for that purpose, for anybody who's just trading current time frame momentum, basically just quick intraday trades like on the SPY Super System or any kind of stocks, you also get this particular template right here. This is the same template as this. It's the same information, but we're just displaying the current time frame momentum. We don't have the other ones on here because when you're doing quick intraday trades, you don't need the other ones. This is what you need. This, the VWAP, the 15 EMA, and we also get these pop symbols. These are also on all the Thinkorswim platforms when you run the SPY Super System. This identifies compression breaks to the upside, compression breaks to the downside, and I use them in conjunction with the other criteria to get the trade. But here you can see this is a nice simple one to use if you're just doing SPY Super System trades, either on the indexes or the futures, whatever you're using. This is all you really need, which is why you have this template and you have this template. You get them both. You can flip-flop them back and forth. All right, so this was I want to show you some trades here. This was the SPY Super System Heiken-Ashi reversal right here. This was on 221. Notice the compression. Notice we're green here, bullish. Notice we went to yellow here, institution selling. Now multi-time frame was already selling, but the current time frame is what we're interested in because this is going to be a SPY Super System quick trade. See that arrow there? That's where we entered the trade right there. Right, and we're coming up off the 15 EMA, the little red line. That's what we're coming off of. This is how we shorten it here, and we ride this thing down. And we keep getting these compression breaks. We're just staying in the trade. We want the stock to stay below the 15. That's our stop. If we had gotten in here and it popped back up above the 15 and closed above the 15, we would have got out. But look how small the loss would have been because we were so close to the 15 when we entered the trade. But you can see how this one moved down, moved down, moved down, moved down. I didn't put the results on here. It was obviously a nice win, and it kept on going. But I want you to see the structure of a SPY Super System setup, based it on the current time frame momentum. Notice it went from buying to selling to heavy selling. All right, we went from yellow to red. See how the oscillator is coming down. So you could have stayed right in this thing and still be in it over here. And that's a big move right there in in that particular setup for a SPY super system. Most of them don't last that long. Most of them are, 3, 4, 5, 6 candles. All right. Now, just to go through the SPY super system for a minute. This is a trade that are quick trades. This is for people who want to trade intraday trades very quickly. It's not really scalp, but it's a semi-scalp. These are fairly fast, but these are for people who want to trade that. And I suggest that you be a somewhat experienced trader to do these kind of things because they're fairly fast and they can move pretty quickly. So you've got to be adept. And I can't post them and I can't alert on them because they're too fast. But these are the results I've had month by month since I put this in effect. I've got a lot of traders doing this, a lot of them making a lot more money than me because they can watch it all day long. And I'm answering questions and looking at other stocks, and this is all they do. But this is for folks who want to trade a lot. And the reason I did this was because, remember I said the number one reason from one of the biggest reasons for retail traders that lose money is because they overtrade. And what I'm trying to do here is give them the ability to make some additional trades if they get bored, which they shouldn't, but if they get bored, this is a good trading system for people that want to trade a lot, but still want a really high probability trade setup to use, right? So you can do a lot of trades during the day, but you're not taking trades just on a whim. You're not forcing trades. You're actually taking high probability trades, right? So this was the July results. 16-0 was half a month. We did that. 25.96. Again, these are my results. 56, 6 and 2. See how many trades there were. Some days you'll get 5 trades in a day. 8,200. September 71.32. 43 and 2. October 33 and 4. Right, 4,800. So this was, and it's important to understand that with the SPY super system, and when you're talking about the SPY super system methodology, this is the SPY super system methodology that uses the SPY super system software to trade. You're only going to have one trade on at a time, and it'll be very short duration trades, and you've got to watch it. You can't put it on and leave because they're too quick for that. I would recommend, unless you're taking it overnight or something, but generally this is not set up for that. Right, so here is our November results, 54 and 5, December 69 and 15. A lot of losses, but notice how big the profits were because the losses are much smaller than the profits. If you know what your profit margin or what your win rate ratio is on a profit target, I forget what they even call it, but it's typically if a 1-to-1 is break even, 2-to-1 is really, really excellent. 3-to-1 is outstanding. The SPY super systems right now is running about 4.4 as far as its profit factor is concerned. That's what they call it, the profit factor, about 4.4. Really, really high. So this was our October. Now, keep in mind the trade results that I showed you in the room, which is what October here was 74.48, and this is the SPY super system. These are completely separate from each other. This does not include this. This does not include this. These are two separate methodologies within the same within the SPY super system methodologies. Okay, there's one for the SPY super system trades and one for the regular rooms and alert trades. See, only 20 trades here. See, it's 37 trades here. Okay, here's November, 54 and 5, 9,300, 14 and 2, 7,300. That's quite a bit of money for just a 7,300 for just 16 trades. And this was December. Okay, so you can see that this just shows you what the SPY super system produces. Here was the last quarter of 2024. I haven't done it for the first quarter of 2025 yet, but I haven't had a losing month with the SPY super systems yet. But you have to be very quick, and you've got to be very, very disciplined in which ones you take. You don't take them unless they are set up, and that means that you've got to be trying to trade with the market conditions. If the market's chopping around, you're going to take very few of these. If you get a trend in the market, then you can go long. If it's going up, and you go short if it's going down. All right, so this was the first quarter result, the last quarter results. 87% win rate over here, 24,000 in the SPY super system and 17 in the room. And so pretty good. It's pretty good. Again, these are separate, but this again is these. I don't post these. I don't alert on these. These are my results. You need to understand that. All right. I'm not saying this is what you're going to get, but if you follow the methodology, you're going to do very well on these. All right. And again, let me just show you some SPY super system trades off of the methodologies we just talked about. This is an older one. This is back in August. and we didn't have the oscillator down here at the time. We had money flow, which I don't use anymore. But again, this all we use in this trade is the current time frame momentum, and we use the VWAP right here in the 15 EMA. So it went, you see how this went from red to blue, selling to buying. We buy it here, you take it, and you just ride this thing up, and that was a nice trade, $220 profit per contract. That's pretty high. You're typically not going to get more in the neighborhood of $70, $80, $120 per profit per contract. That's typically what you're going to see. All right, here's another one here. This was on February. We took this. This was a really quick trade. And these are Heiken-Ashi candles right here, by the way. There's a Heiken-Ashi reversal. You can see it as it comes off the 15. It goes, it's already yellow and red. It's already bearish. We take it here as it breaks down with a pop out of the box, and I'm out of the trade right here. Next candle. Didn't take long. And here it is again. And this is with the full template. And here it is with the template that's just set up for SPY Super System trades. And you have it right there. And that's what it looks like. Again, see how this selling, went back to buying. See how it turned around and headed back up again. This is SPY trade here. This using the new template. Again, this is where I would have taken it right here, because it was, you went to yellow here, so I have to be cautious even though I got a green candle, but this is where I would have taken it and went up, and then you get out right here pretty quick. But you see the buying right here. All right, you see the VWAP and see the 15. Those are your key levels. This was another SPY Super System trade, $130 profit. That's more in line with what you normally see. See green across the board, coming off the 15. Buy it here, ride it up, and I exited right up here. Could have exited here, I suppose, but it stayed above the 15. That was my key, and it's still in profit, obviously, because it's 15 is sloping up, but out right there. Another SPY Super System trade here for about $90. This was on the IWM, the Russell 2000. Yellow, selling, blue, buying. Bing, you take it right there off the 15, and you just ride this thing. It took a long time to get up there, but it stayed above the 15 the whole way. All right, this was another one here, another nice one. This was as it compresses, it was already red. We had the institution selling. All I'm looking for here is I'm looking for an entry spot, which would have been right there as it breaks down with a pop out of the box symbol. In other words, a compression break below the VWAP. Everything's red. Institutions are selling the heck out of the IWM here. I take it and write it down, and I get out right here, $120 a contract. Right? And any time in here, any place in here, you could have got out as the momentum weakened, as it stayed red, but then it finally turned to blue here. So going from selling back to buying again. Another one here. Okay, so I just kind of want you to see what these look like. There's red, selling, blue, buying. Where do I take it? Right as I get a pop out of the box symbol above the VWAP and the 15 right there. 15 becomes my stop. I just ride this up until I get a red candle, and then I get out. All right, this is SPY again. I didn't put my entries on here. I just want you to be able to see this. Now here's red and here's blue, okay? Selling, buying. This is kind of to show you an example. Here's where you would think about getting in, but would you get in here? I wouldn't, because I'm waiting for it to break the VWAP, the pink line. It's got to break above the VWAP. So I get it's doji. I don't take it, boom, I take it right there. As it breaks above the VWAP on blue, I take it here and I'm out right there. 5 candles. Another one here, and I didn't even identify where I get in and out, but one thing I want you to notice here is when I took this, I took it here, actually, okay, as it was red, I took it as the compression broke to the downside, below the VWAP, breaking below the VWAP, I take it here, and I get out right here, as I get a tail here with a green candle, and then I get back in again, as it went from selling to buying, right here, as it broke above the VWAP and 15 right here, and the institution went from selling to buying. I buy it here and I ride it up, and I get out as it approaches this pivot point right there, because again, as I told you, that's kind of a resistance level. So I took it. So I took this short, I took it long. Get 2 trades, both winners off the SPY Super System. So that's how you use it, right? And I'll kind of drop it there. I don't want to keep on going. You can see. I just want you to see the setups. All right, yellow to red. You can see obviously this is green to red, yellow here. This is obviously a short entry. which stayed below the 15. Okay, so that's by super system. Now let's talk about trades we take in the room and an alert service that are going to be longer term type trades, which longer term to me is overnight, even all day. If I get in like at 10 in the morning, I consider it a longer term trade if I'm getting out like late in the afternoon. These are going to be trades that are alerted on and what we take in the room. All right, so here's SMR. We've already pointed this one out. This was a big win we had just this past week on SMR. Again, current time frame momentum goes from green to yellow, back to green, and the multi-time frame is already green. So this is a long right there. This comes off of earnings. We buy it here, we get out here, and we make 56% on that trade right there. Right? It's not rocket science. I mean, if you can identify when the institutions are in the trade, you just have to try to trade with the best stocks that are in the trend. Sometimes it's hard because sometimes the market's very choppy and you can't find anything. A lot of days I'll go all day without a trade. This was Nike. This was the one I told you about. We actually took it here as it broke out of this compression to the downside right here on this candle. See, everything's red. Current time frame, multi-time frame momentum, everything is red. The institutions are selling the heck out of this. Some people took some profits on this day. I stayed in it, and then we got this big flush down on the tariff news, and that's with a 216% winner on that. Okay. Sarepta was the other one I told you we were in. We get in on this around the 28th. See the compression? We buy it right here. This was on the daily. The VWAP does not count in the VWAP. What I'm looking for is a break of compression to the downside, which we got right here actually on the 28th. And we took it and we just took it down. We get out of this on 4-1 right here for a nice, really, I think it was a 78% profit on Sarepta. Again, very nice. But you can see the institutions, it doesn't take a rocket scientist to see that the institutions are selling this thing. When you look at the daily chart, they're obviously selling it. Now, this was a long we took on HIMS back on February 7th. I took it here. I probably should have taken it further back here as soon as this all went to green right here, but I guess I just missed it. But I did take it right here as it was coming along sideways. And I got a Heiken-Ashi reversal candle here. So I took it there and I wrote it up, 25% profit. I actually left a runner on and it produced 269%. I got a big pop of that. When I posted my results, I didn't post this in there. I don't include that in the results I got, but that's what happened on the actual trade that I took. Again, green. You see the institutions right from here on, they're all buying. I mean, you can see they're buying, and here they started selling. And Palantir, this was one we had. This was another nice trade we had back on 10/8/24. This goes back a ways. And again, see the different colors here? Long-term, current time momentum was green, but current time frame momentum, the daily was moving back and forth. So we took it as soon as it went back to green again. We took it there, and it was coming out of compression, and we took a 31% profit in 2 days on that one. Lulu was another good one. We took it here. We didn't take it on earnings. Earnings dropped down. See, it's compressing. See, it goes to blue, buying, yellow, selling on the daily chart. Selling right here on Lulu when we have current time frame momentum was already red, and this was yellow. So we took this short right here and entered overnight. We got it in for $1.92 and we got it for $3. So nice profit on Lulu. Amazon, this is a 5-minute chart. This was an intraday trade on Amazon. Notice the current time for momentum. Now this is what we're interested in, right? It's going back and forth, yellow, green, yellow, green. Now it goes to green, and I get a pop out of the box symbol right here. I can't take it here because it's yellow, but I can take it here because it's green, and I use the 15 as a stop, and I just ride this thing up. 32% profit in 45 minutes on that one on Amazon. Another nice trade on ENPH. Right here, get it right here as it compressed and dropped down. Are the institutions selling this thing? Everybody can see the institutions are selling this thing. Current time frame momentum, multi-time frame momentum. They're clobbering it. It's just selling the heck out of this thing. So, I mean, anywhere in here, you probably could have bought it, but I was waiting for a break that I could use, and I took it right there. 20% in an hour on the ENPH. This was on the 5-minute chart. Verizon, 50% in an hour. Institutions buying or selling. It's obvious they're selling. Look at the red here. I mean, they're selling. And this was a big profit in an hour on Verizon. The premiums are pretty tightly, bid-ask spreads are pretty tight on Verizon. And you don't usually get big moves in Verizon, but we got a big enough move that we get in for $47 a contract and $45 a contract. We get out for $67.